Hey everybody, this is Matt Grossman with Barchart, and today I'm lucky enough to be, excuse me, having an interview with CEO and co-founder of AMASS Brands Group, Mark Lynn. How you doing, Mark?
Good, Matt. How are you?
Welcome to the show. Glad to have you.
Thank you. Thanks for having me.
Yeah, our pleasure. So AMASS Brands Group is a premium multi-category beverage platform that spans non-alcohol, functional, and alcohol 2.0. I got that off your site. We're going to go into all of that in this call. But I'd love to first kick it off with hearing about how AMASS Brands Group started and for everybody who's watching this now, AMASS Brands Group actually is now traded on NASDAQ and had a DPO last week. So if you would, give us some history about how you started and what led to the DPO last week.
Sure. So we started the company in 2019, it was great timing. We started about a year before COVID, so a lot of key learning lessons there. But really, the thesis was that that there's this kind of secular shift happening with consumers, and that's permeating in all different elements of people's lives. You think about the way people are making different choices around health and wellness, and how that's affecting specifically the beverage alcohol industry, or what we would think of as like kind of the adult celebratory occasion. The consumer is kind of moving towards moderation. They're moving towards better ingredients. They're moving towards functional benefits, kind of premium experiences, and then brands with cultural relevance, right? And that's been where you've seen a lot of kind of influencer or celebrity brands starting to have a lot of cultural relevance. And so we started then. We started with our original gin brand, which had it was the first brand that had ashwagandha and reishi mushroom and lion's mane. It was made by award-winning female master distiller Morgan McLaughlin, who's still the chief product officer of the company today. And then we quickly expanded into our first non-alcoholic offering, which was called Riverine. Then we helped incubate a brand called Dissois, which was a partnership between AMASS Brands Group and Katy Perry, the pop star, in providing a superlative cocktail adjacent non-alcoholic experience with adaptogens. And that product has gone on to be a smashing success. And from there, then we started acquiring some natural, organic, and biodynamic wine brands, because while you're seeing the wine category has been under a little pressure the last few years, you're actually seeing that the organic category going into this concept of people wanting better ingredients and kind of functional benefits. The organic and natural and biodynamic wine market has actually been growing very, very steadily, and that's kind of where this AMASS Brands Group customer is living when they want to do wine. And from there, it's just expanded into a multitude of other products, and pretty much we now cover the entire gamut of the adult celebratory occasion, whether somebody is drinking or they're not drinking, now moving more into even areas like functional and hydration. And those are one of the areas that we're super excited to announce today is actually our first hydration adjacent product. So that was 6 years in 5 minutes.
You guys have accomplished a lot, that's for sure. And tell me, how did you guys decide to go public?
The reason that we decided to list the company is if you look at the way the beverage industry works, right, and you look at kind of this portfolio growth, if you look at the big incumbents who have built giant businesses over the last several decades, most of those companies are public companies. And the reason that all of the strategics are public companies, is because it gives you a platform to grow with more visibility, more flexibility, better access to capital over time, And we're in this for the long term. We wanted to build something. Management wanted to build something that we could build for a very long time. It's one of the few businesses that's truly that's AI proof. AI actually, we joke that it's going to give people more time to spend connecting, and connecting is the business that we help with. So that's our AI plug. What you see a lot of times in these kind of startup emerging beverage brands, they might have consumer traction, but they just have limited infrastructure. And so being kind of in the public markets, it allows you to have those kind of distribution relationships, the operational help, the capital, and also provides you public currency as you think about kind of a buy and build strategy, right? Because ultimately the name of the game as building a portfolio structure is you want to amortize your SG&A across multiple brands, so that the kind of back office functions and everything from product development is being done by a crack team. That team can actually move amongst different brands to solve problems in real time, and you're not always having to bring in super expensive specialists and things like that. You can actually build that long-term kind of durable competitive moat by having all of these things in-house.
That makes a lot of sense. That's great. One of the things that I do know about the beverage space, and I'm not fluent in the beverage space by any means, is that it's not an easy industry to break into. And you guys have done it successfully. Can you talk a little bit about just your industry? What are the biggest challenges? How you've overcome them now that you're a publicly traded company and announcing all of this innovation?
Yeah, so I think the way to think about it is the failure rate for startup beverage brands is actually very high. Of all categories, it's one of the highest. I've heard, and I don't have the empirical source to tell you on this, but it's somewhere like around 90% failure rate on beverage. With that said, it's one of these categories that once you have established yourself and you've built a very nice base, the total addressable market, or the TAM, is very, very large. And so you can build huge businesses in this space, once you kind of get the flywheel going. But it's very hard because particularly anything beverage alcohol adjacent, in the US, there's these legacy rules around tied house. So the same way that consumer brands have done disintermediation using the internet in other categories, that has really been unavailable to most beverage alcohol adjacent brands. And so you've seen a lot of consolidation in the distribution tier, and that has really favored big incumbents who already have very meaningful portfolios. If you're a challenger startup brand that's subscale, it's very, very hard to get attention from those distributors. And if you don't have attention from the distributors, you're not going to get attention from the big retailers. And if you don't have attention from the big retailers, it's very hard to build a very viable business. So I don't want to say the system is rigged in favor of the guys with a little bit of scale, but it certainly helps once you've kind of broken through that sound barrier and you start having scale and those meaningful relationships, and you start mattering to the distribution partners and things like that. And then once they trust you to have an innovation engine and to be really bringing products forward to the customer that the customer is going to resonate with, you can build a very kind of virtuous cycle from within the industry to build kind of long-term shareholder value.
And you have broken through with AMASS, because will you share with the audience where some of the places that they can find your beverages?
Yeah, so certainly, so yesterday we actually announced that our brand Good Twin, which is our I actually have a bottle here. This is a bottle of the rosé. It's our non-alcoholic sparkling Prosecco brand, and this is made in Treviso, Italy, by third generation winemakers. It's absolutely superlative product, really delicious, and we just announced yesterday that we've become the #1 organic non-alcoholic wine brand in the US. accounting for about 1 in 3 dollars spent in the category. So 35.4% dollar share. And, even more encouraging has been the growth. So Good Twin has grown over 120% in dollar sales year over year, and 115% in volume. So it's growing much faster than the overall organic non-alcoholic wine category. And it just kind of proves out our thesis that when you kind of combine fast-growing category with premium positioning and great product quality, you can take market share very quickly from within this kind of platform ecosystem. And so, it's sold, just as an example with this brand, it's sold nationally at Whole Foods Market. Huge shout out to them. They've been fantastic partners. It's sold at Food Lion. It can also be found at top bars and restaurants from Las Vegas to New York City, and is becoming kind of a staple non-alcoholic, alternative for people to have on their menu. So when you want to have when you want to have a celebratory moment, there's nothing better than a nice glass of, Prosecco or champagne alternative. But whether you're just cutting down, or you're pregnant, or you're not drinking, at all, Good Twin is a great alternative to that.
Perfect timing too, especially now that, everybody's caught on already, but at least my wife, when it comes to being hot in the summertime, rosé is her drink when we go out. So that's going to be perfect.
Well, on that note, I'll also do a quick shout out to our brand Summer Water, which is the best-selling premium domestic rosé in the United States. So premium is in that $15 to $20 price point. And Summer Water is made in the Central Coast. It's made by a award-winning winemaker, Ryan Zodovich. It received 93 points from Wine Enthusiast last year, and it's so dry that it's actually sugar-free. So it's a sugar-free 93-point rosé that you can get for somewhere between $15 and $18. 93 points last year, but I think it was our 4th year in a row that we've scored over 90 points. So keep an eye out for Summer Water too.
I'm keeping an eye out for both.
Yeah.
So in addition to the Good Twin announcement, which was just announced this week, being the #1 organic non-alcoholic wine brand in the US, you had another really big announcement this week, which is about your new electrolyte mixer line. Will you tell us about that?
Yeah, absolutely. And so this is a product we're really, really excited about. So we launched AMASS electrolyte mixers this week, and it's essentially revolutionizing the cocktail mixer. So we're including 250 grams of sodium, 60 milligrams of potassium, and 20 milligrams of magnesium in each product. And this category really truly sits at this intersection of moderation, wellness, and then the desire for premium mixers. So consumers are upgrading the way they drink, whether it's with tequila, vodka, mezcal, or other non-alcoholic spirits, or you just want to drink it, as a standalone. And we think it's a really kind of interesting category because it's premium enough for cocktail culture. It's functional enough for wellness consumers, or what we would call lifestyle hydration. It's like you don't have to always be running a marathon to need electrolytes. It can be something as simple as going and dancing to your favorite DJ all night. It's clean enough for daily hydration, and then it's versatile enough to work with alcohol, non-alcoholic spirits, or on its own. So this is what I would say a very high conviction product for us. The initial feedback has just been terrific, and we're going to be launching in multiple states imminently.
Congrats! That's really cool. I did want to also talk to you about one of the things that I've noticed, and I think I've seen the headlines, and a lot of us have seen the headlines about how the alcohol, or people aren't drinking as much alcohol, right? And especially the younger generation. I keep seeing articles about that. And we know at Barchart and every investor out there that the huge alcohol companies of the world, their market cap has been shrinking.
Yeah.
So I think that you guys seem to be in the driver's seat with this one. Could you talk to a little about this changing landscape and how this is an opportune time for AMASS?
Yeah. Once again, this is we view this as kind of like a secular shift, right? This is a real wake up moment for people in terms of their lifestyle choices and their relationship with alcohol. And once again, we still sell alcohol. We sell organic wine, and we sell premium tequila and vodka and gin. So we have these in our portfolio, but we think that the consumer is drinking in more moderation. They're being more intentional about the products, and that's just reflected in the share prices of the big incumbents. And so if you go back to 2016 and you kind of look at, say, four of the biggest kind of whiskey dominant producers, MGP, Brown-Forman, Pernod, and Diageo, their market caps were like $224 billion. Today, their combined market cap is $80 billion, right? So they've had about a 64% loss from scale, right? And these guys have, huge inventory overhangs. And they just thought that the COVID numbers were going to go on forever, and people were just going to continue to drink into, at the same growth trend line. And that's just, there's been a reset. There's been and one big part of that is that 1 in 8 Americans is on GLP-1s, right? That's a huge, shift. So it's a cultural shift with Gen Z. People are on GLP-1s. But okay, so people are moving into health and wellness. Well, they're not stopping drinking traditional alcohol products and then shifting over and drinking more Coca-Cola, right? So there's all of this, and people still want to have, they still want to have connection. They still want to have these social occasions. So they're looking at products like Diswal with adaptogens, like Good Twin with, Good Twin as a non-alcoholic celebratory occasion. They're looking at things like electrolyte mixers to put lower amounts of alcohol in them so they can feel better in the morning. They're looking at sugar-free rosé. They're looking at, natural and organic and biodynamic wines rather than their traditional table red. So that's where the consumer is going. That's why we think, as a burgeoning, public company and platform, that there's just there's a lot of room to grow. One other thing that I've noticed is that because these guys' balance sheets are all under pressure from this secular shift, they have not been as aggressive in their M&A of these new booming non-alcoholic brands. So traditionally, they would have been the acquirers for these brands. But when your market cap is in free fall and your core business, you're rethinking everything within your core business, you can't be out opportunistically buying the leading non-alcoholic brands. And so, that seems like a pretty interesting opportunity for a newly listed public company that it's very ambitious. And so that's kind of how that kind of fits into our roadmap of organic growth as well as potential bolt-on acquisitions that make sense.
It seems like AMASS is well diversified, right? You're catering to traditional wine drinkers, yet at the same time, people who want to enjoy and imbibe without, I don't know if imbibe is the word without alcohol, but drink without alcohol. And then you have your electrolytes, right? It seems like the diversification is really important to you, and that's how you're going to expand the business. So what's in focus for the rest of 2026 and the years to come for AMASS Group, AMASS Brands Group?
Just to touch on that, the one thing you said about diversification. So we are diversified across category, but we're very concentrated within our consumer. So we know who our consumer is. They just want different products for different occasions. And then if you actually think about the picks and shovels or the rails that get your product into market, it's the same truck that brings most of our products to a Whole Foods, and our non-alcoholic sits on one side, and our tequila brand and gin brand sit on the other side of that aisle, which sit next to the organic wines, which sit next to the mixer section. So we're actually like, our route to market. And then if you think about premium bars, restaurants, and hotels and things like that, you do get the efficacy of your sales team having multiple products that they can sell in, because not every product is right for every property, but you ultimately want to have a few things that work, at any property versus just trying to sell one product. So it also provides, a base case for risk management. And so it allows us to scale up on the things that are really working and allows you to test new things. So, big fans of the portfolio theory, particularly in beverage. And sorry, the last question was?
Where are you guys headed next? I mean, you guys are innovating and continue to expand your portfolio. What do you have your sights on for the rest of the year and the years to come?
Sure. So I think I alluded to it somewhat, in our conversation, that like we see this really kind of interesting moment in time, and we think that AMASS entering the public market at this moment, when the customers are changing so quickly, and owning the non-alcoholic functional wellness kind of positioning and the premium lifestyle products that are no longer niche, and having the goal to build a platform. That platform can create both organic growth and inorganic growth via very thoughtful acquisitions, and that scale, slash the discipline is going to win over the long haul, right? And so we enjoy what we do, and we're very excited to build this into a very meaningful business over time.
That's great. Well, it's been a pleasure, Mark. Thank you so much for taking the time. And I learned a lot. I've always been curious about the beverage industry. I see headlines sometimes, but I feel like you gave us a lot of good information that we might not have known. It seems like you guys are doing a great job. Congrats on being a publicly traded company now. Congrats on the two exciting announcements of Good Twin being the #1 organic non-alcoholic wine brand in the U.S. and the launch of the electrolytes. I'm going to check both of those things out this summer, definitely. And I appreciate you being on.
Absolute pleasure, Matt. Thank you so much for having me.
Thanks, Mark.
Cheers.